Welcome to the live stream, folks. Let's talk about natural gas. It's Sunday night and we're ready to go. The rollover is tomorrow or midnight, depending on your broker, which is in about, it's 7 o'clock my time now. So 5 hours time exactly, the natural gas market opens up. Midnight my time. I'm not sure exactly. I think it's, I don't know. I can't remember what time it is, New York. So that's in 5 hours time, and we're going to have a look at the charts. I want to go through very quickly what's just mentioned, really, what we're seeing on the news still on Natural Gas Intel, Natural Gas World, and the various other places that you can go and have a look at. You'll have your own sources for this, I'm sure. But there's a general feeling that there's an anticipated increase in demand through LNG mostly. You'll see LNG mentioned on just about every page of every one of these mainstream natural gas websites, suppliers of information. And the story is all about LNG. So generally, we've got a situation where supplies are dropping. In other words, inputs are dropping. Production is dropping slowly, bit by bit. Storage is dropping, and demand is likely to incrementally increase ad infinitum. As we go along, there's going to be more and more energy demand. The world thrives on energy. There's no cutback in that. Airlines are forecasting huge growth next year. Boeing's investing trillions of dollars, and we're an energy consuming species, humans are, and there's going to be no let up in demand for energy. And LNG seems to be something that's pretty exciting and pretty anticipated by the market. LNG take up from the US will increase the natural gas price. We have about something around about, I think, 11%. Brian from Energy Rogue will correct me. About 11%, maybe it's now down to about 10 or 9% of US production. I think it dropped to just below 10. Goes out of the country in container ships, LNG ships, liquid natural gas. And as that increment increases, that percentage, there will be more and more demand on natural gas. I think generally the overall sort of idea for the future is that this is no longer a transition material or energy source, but there's a different word that's being used now, and it's also slipped my mind, but it's something like that. It's a more than a stopgap now, but something perhaps a little bit more solid, and a lot of interest is being shown in LNG. So the overall environment leading in towards the end of the year is fairly positive. I hope you can see all of this on your charts, on your screen. Now, I want to point out one more thing to you, and I put this up on X sometime last week, and I also got this from Energy Rogue. I put this up in the last live stream, or maybe I didn't. Maybe it was just in the video. This is the forward strip for natural gas, courtesy of Energy Rogue. Thank you very much. And you can see this is the blue one down at the bottom here is 2024. These two, the ones above us are 2025 and 26. Ignore those for now because we're not anywhere near there, not yet. We're approaching 2025. But you can see the 2024 forward curve or forward strip actually starts to only pick up towards, I suppose, the end of this month. We're now rolling into the September contract, and there is a bit of a tick up in the price there. But the big tick up takes place the following month in October, where we tick up to about 225, and then a sudden leap up into November and December above $3. Doesn't mean that that path's going to be followed, because these all trade separately, these contracts, and they'll be moving up and down as the front month does as well. So, but that's an indication that there's a general bullish optimism as we approach the end of the year, and those levels will change, but perhaps those curves will remain the same, and we'll see a continued take up as we approach the cold season. So that's all of that. And then again, if you look at Natural Gas World, there's a lot of stuff about LNG, Vietnam LNG, Occidental Petroleum, selling it, blah, blah, blah. I'm not going to go through that article. Some of this is now paywalled. I haven't kept up my subscription with one of these. I can't remember which one. I don't want to mess it all up by trying to get through this. And Africa is missing the LNG boat. Gas in transition. That's what they're using. Gas in transition. So a transition. I think it's a bit of a pun, this gas in transition, meaning a transition energy source, but also in transition on a boat. That's what an LNG tanker looks like, and that's heading from perhaps the US to somewhere else like Europe, delivering LNG, and Africa's missing out, even though we've got a whole bunch of it just down the coast from me. So that's that. All the news looks fairly long-term positive, but in the meantime, we've got a little bit of a slowdown, and we're going to have a look at the charts and see what's going on. And this is pretty critical for a number of people. I've spoken to some people today, in fact, who are wondering exactly what's going to happen with natural gas. So I'm just going to check that my charts are working. They seem to be. So let me go, first of all, we'll start from, rather than the broader view from the day chart, I'll start with a 15-minute chart. It's a chart that I don't trade off, but I spotted this pattern on Friday, and this is where we traded. We got down to about $2. This is a 15-minute chart, and have a look at what happened at the bottom here. We got stuck here and formed this sort of holding pattern just at $2. In fact, 1 cent, not even 1 cent, 1/10 of 1 cent above $2, and that's where we held, and we eventually closed about 5/10 of 1%. Of 1 cent, about half a cent above $2. Now that was a protected level on Friday. You can see by all of these moves, a lot of fighting going on in this pattern, and there are options expiry. The rollover is tomorrow. So the $2 level, apart from being a very key psychological number, is also a protected number from the perspective of those options. I don't know why anyone would set a strike or a an options price at $2 precisely. Maybe it was $2 and maybe it was $1.99. I don't know. But $2 seemed to be the level, which is very odd. It's not normally at perfect round numbers. However, having said all of that, look at this 15-minute chart. And what we've got actually is what looks like a broadening pattern. Now, I know a lot of you are going to say, well, you know, you can call that what you want, but the price is moving down, and that is true. But this is a broadening pattern, a little bit messy, but nevertheless, it's there. And broadening patterns are one of the favorite patterns that I like to trade off on charts. And I think they've got something like an 80% probability rate of working out. So there's still a very good chance that this could break down. 20% is a lot, 2 times out of 10. This will break down out of this pattern. But overall, the movement in natural gas is very negative, very bearish at the moment. That's placing a lot of downside pressure on this. We'll look at the targets now when we get to the longer term charts. But also there's a lot of this protection price action going along at this $2 level, which is maybe adding a little bit of optimism. The fact that we didn't break $2 or close beneath it is really important, because that means that the bulls actually won last week on Friday. So, or at least kept that front month contract above that $2 level, which was the intention. So that's pretty good. We've got a reversal pattern here of sorts. It's not very clean. We don't have any real touches beyond this part in the beginning at the top of this move. But we do have the 200 period moving average up there and a few other areas. Remember, this is a 15-minute chart. I don't trade on these, just to illustrate what was going on at this time on Friday. Now, let's go to the chart, the smallest time frame that I normally trade off. That's the 4-hour chart. And we've broken down through a couple of key levels here. First of all, that level that was touching this trend line, and that was on Thursday, I think, 25th. That was where my arrow, where the cursor is now. That was 8 o'clock on Thursday night. So, and it's now almost that time on Sunday night. So that's where we were. But we just broke down there. We tried to hold that level. We tried to hold the trend line twice, 2 4-hour candles in a row. Didn't manage to hold it eventually and broke down. We only broke down towards this low here, and we haven't actually got there, and that's at $1.98 and a bit, 1.99 call it. I can draw a line across there to illustrate that that's the potential support level for a double bottom on this 4-hour chart. Now I've drawn it in red. I'm actually going to change this to green for those superstitious traders amongst us. We want that to be green and not red. So that's where we are, potential double bottom, long track down, very oversold. We tried to get off that trend line. We've now broken down through that trend line. So I'm going to delete this one because it wasn't a great trend line in the first place, as we explained in the last live stream, with only 2 real touches and a big sort of bulbous gap in between them. So not a clean trend line. So let's ignore that. Now this looks a lot better. Double bottom at 1.98, maybe, possibly. I'm actually banking on that. In fact, we may not even get to 1.98. At Sunday night, the market's going to gap up, and that means, sorry, I'm preempting what I think it will do. Let me rephrase that. At Sunday night, the market is probably going to gap because of rollover on Monday, tomorrow, or tonight, midnight, depending on your broker, and because of the options expiry, that's all being cleared out from Friday. So we are going to gap, most probably. Most weekends we do. Sometimes the gaps are big, sometimes they're small. Last weekend we saw I think it was a 2 or 3 cent gap, almost nothing. Sometimes we see a 10-cent gap, unbelievably, sometimes 5 cents. Are we going to gap this weekend? If we do, we could gap down to this trend line, or horizontal, not trend line, this support line, and bounce back up again. We could sort of gap down and bounce up, or we could gap right over it and carry on down and just completely miss that support level. Or we might gap up, and that could be anywhere really, back up into this block here, this green block, or the red block above that, something like that. Let's say we don't get any gaps. Okay, let's work on that presumption. It's not going to be accurate or true, but let's trade this as if we're looking at it as is, and it's going to roll over into the next 4-hour candle like it always does with no gap. We'd be looking for support down here at 1.98 to hold with a beautiful double bottom. Now you might ask me, does gas like double bottoms? We know that gold likes double tops and bottoms and triple tops and bottoms. There are a couple of other things that do, like some of the stock indices, things like some of the currencies, like particularly the majors, like trading with double bottoms and double tops and not so much triples. But natural gas does like double bottoms. Now, if we scroll back, you're going to say, well, prove that. And I'm not going to be able to find anything, of course. Maybe I will. There's a double bottom, very similar to what we've got here, for example. A move down, bit of a bounce. Let's have a look over here. Move down, bit of a bounce, back down towards that area. And on this occasion, we didn't quite get down to the double bottom, and we just simply turned around. I'd hazard a guess that that may have been a weekend as well. Yeah, that was a Monday. This is a Monday move down. And then the gap up, this is a 4-hour chart, not a gap up, a sort of a spike up, a lot of thrashing around. That didn't make a double bottom, but it sort of tried. Maybe it got to just over 78.6% down and then bounced back up again. I'm just going to quickly check the chat to make sure that no one's moaning and that everyone can hear me. Good day, Bears versus Bulls. Nice to see you, mate. Haven't seen you in here before. Fantastic. Bears versus Bulls, well, welcome. You're from Trader TV Live, and I frequent your fantastic chat room many times during every week. I have it on in the background, and that's at Trader TV Live, Bears versus Bulls in the room with us today. They have a very huge following. I think about 500,000, or maybe it's close to 1 million now. So that's Bears versus Bulls. I think everything's working fine. Let's go back to the chart. So that's the sort of thing we could see. Basically, just move up straight from where we are without making a double bottom, without getting lower than $2. So let's just go back to where we are now. The $2 level is really, really key. I think that $2 level is probably the best buying level at this moment, maybe 1.98, but probably $2 is an area that I consider to be a cheap support area for natural gas. Let's have a look at the day chart, and you can ask me even more. But first, I'm going to have to get rid of this line because it's not going to show up well on the day chart. That was the expanding pattern on that 4-hour chart and the 15-minute chart. This is the day chart. Now, let's have a look at this very closely. There's that channel that semi-channel that we got into, sort of started to form, break down, and then we've tested it from underneath twice now. We failed both times, and we're moving down towards this level. I did draw a Fibonacci level in here last time we talked about this, from the bottom, right from the bottom. That's not the right tool. That's a trade tool. Let's find it. It's up here. I did. That's now stuck there. I did draw a fib in from the top to the bottom. Let's just have a look at that after I've gotten rid of this trading tool. And you can see we've broken down through the 61.8% fib. That's this green line where you can see these blobs showing. And we've now got down to the support line at $2 or thereabouts. This previous low got just below $2, as I said, at 198 and a bit. We'll call it 198. The 786% Fibonacci is below us at 188. And that also coincides, and that will have filled the daily rollover gap. Now, I'm going to show you this on the Henry Hub, just to show you where that rollover gap is. And if I can find it, Mr. Hub, come to me. Natural gas, maybe it doesn't like 2 words. It's over here somewhere. Pepperstone. No, of course I can't find it. NYMEX, there we go. Right at the top, right in front of me. Right, so this is the NYMEX Henry Hub chart. We had a look at this before. There was that little short-term trend line that we tried to hold. We broke down below it, 2 days down below there. And look at what we've got, the 786 fib there. It's exactly at 1.9. This is a Henry Hub futures chart, not the spot price at Pepperstone, at about 1.93 or 1.92. It's also a previous swing high on two occasions, that swing high and that swing high over there. And it's also the top of this rollover gap. The rollover gap top is at 193, 94, thereabouts, and the bottom of the rollover gap is at 183. So sometimes when we approach a gap on the charts and retrace to it, down towards it, or back up towards it if it's above us, we will reverse. Let's use this example. If we move down towards the top of the gap, sometimes the top of the gap can act as a support level and not the bottom of the gap. If we need to fill the gap, we will get to the bottom of the gap. Sometimes you don't need to fill the gap. The point is that this is a rollover gap, and it's not a weekend gap or an overnight gap or a trade gap. This is actually a rollover gap from one contract to the next. And if I click on here, you can see which contracts. That was from the April to the May contract. That was the gap. And that was actually a massive gap, a gap up. So could we, and in fact, the gap's a huge gap. It's always, in fact, the bottom of the gap is much, much lower. It's actually at 1.65. But I don't think we're going to get that far. I personally don't feel that. But, you know, I could be wrong. And I'm always allowing for being wrong. It's not a mistake to be wrong. It just means that your probabilities, if you calculated them correctly, if you think you've got a 70% chance of winning a trade, if it's a good setup, then and you get it wrong and you fall into the 30% losing part of that equation, it doesn't mean you were wrong, or it doesn't mean you were bad at what you were doing. It just means that you played the probabilities and you chose the 70% probability path, but it went the other way, the more unlikely way. But it doesn't mean that you got the analysis wrong. It means that you probably got it right, but the probabilities went against you in that instance. Now, I don't think we're going to get that low. I think we might get to the bottom of the gap, 1.84, but I think if we're going to get any further, we might gap down to the top of this gap, and that's where this new contract started. So it's not a bad place to have a go, and that's at 1.93. So either we're going to hold here. I think we might try and touch 1.93, maybe. We'll see, and then bounce up from there. But I have to allow for a move down below this level into this gap. At the bottom of the gap, we're down to 1.63, and then below that, we've got 1.5s and even below 1.5. I don't think that's the most likely scenario. I'm looking to buy more natural gas because I still don't have a full-size position on this, but I'm approaching it. I bought a little bit more around about the $2 level, and I'll consider adding my last position on when we get a clear reversal candle on a 4-hour and even possibly on a day chart rather than the 4-hour chart. Depends how low we get. If we don't get any lower than now, then I won't be adding anything on. If we get significantly lower, and I mean, we've got to get 10 or 20% 10 or 20 cents below where we are now, I'll consider adding some more on, but not until then. So that's really where it is at the moment. So we got $2.006 on the spot price here at Pepperstone, and we've got exactly the same on, hang on, is this Henry Hub or what have we got? Yeah, now I've changed both charts. I didn't mean to do that. So we want to go Nat. Let's have a look at the futures over at Black Bull on the 4-hour chart. So this tracks the Henry Hub price, but this is rolled over already. So this is an interesting chart to watch because it has rolled over, and this is trading at 2.03. So we're very close to the bottom of this double bottom, potential double bottom. Sorry, is that 2.03? And the bottom of this chart on the futures is actually at 2.007. Excuse me. Yeah, so, excuse me, 2.007. So I have a position from up here at about 2.21. I have a position from around here on the Henry Hub and over here as well. And so my average price is in that region. On the spot price, my average price is a little bit higher, but not much. I wouldn't mind adding a little bit more on. But look at this futures chart. Let's go to the 4-hour on this Henry Hub futures chart at Black Bull. And as you know, it has rolled over already. So this gives us a clear indication of what the next contract's doing, the September contract. This is the September contract, 2.03. So could we get to $2? Sure, we could move down there and touch $2, or we might just hold where we are at the moment. We'll have to wait and see. But I actually think this looks quite good. We've had a very, very, very long drive, I was going to say, down. That's I suppose a drive. We've tried to bounce off this $2 level once, and we're now approaching the $2 level for the second time. If you believe that this is going to bounce from $2 and move up and form a double bottom, it might be a good idea to buy natural gas at around $2, or even at the current price, $2.03. If you don't think this is going to hold here, then you might just want to hold off and see what happens next. There's always an opportunity to wait for the next 4-hour candle. And if that doesn't provide any clues, there's another opportunity in the next 4 hours, and you can just wait for the next candle to roll over. There's no rush. The 4-hour candle is a really good candle to trade on natural gas because it gives you time to look at the charts, to evaluate the movement. Often the movements are erratic and fractious in the shorter time frames, and there's a lot of chopping around. It's a very messy instrument to trade. And that's why if you go to the 4-hour chart, you can get a little bit more of a mellow view of things. And also, you're not nearly as rushed. If you're trading off 15-minute, 5-minute, or even 1-hour charts, you're a little bit rushed because you've got a very short period within which to make a decision. When you're trading on a 4-hour chart, you can walk away for 4 hours, go for a walk, go for a hamburger, play some computer games, play some music, watch Baby Rainbow, Baby, whatever it was on Netflix. Can't remember what it's called now. It was a baby reindeer on Netflix. And you can come back 4 hours later, having relaxed a little bit and chilled a little bit, stood away from the charts and regained some sanity. If you're trading those very high frequency 5, 15-minute, 1-hour time frames, it's incredibly stressful. When you get to about my age, the stress becomes less desirable and you want a more relaxed sort of lifestyle. So that's the way we are in natural gas, folks. I've taken quite a long time, about 20 minutes to talk about it. But please, if you've got any further questions on that, now's the time to put that up in the chat, because I will cover that and complete natural gas. You've got about 30 seconds to put your question up, and then we're going to move on to other instruments. I hope I've been clear. I felt like I wasn't quite clear enough or concise enough or precise in what I was trying to say. But basically, in summary, we need to hold the $2 level tonight. If we don't, we're probably going to go to 1.93, maybe with a gap, maybe without a gap. We might gap up, we might gap down. Who knows? It's all up for grabs. There's a lot of tension going on in the Middle East, which could put a bit of pressure to the upside on natural gas. Unlikely, because we're basically talking about natural gas supply from the US. But maybe a little bit of uncertainty in the Middle East. Hezbollah seems to be becoming more and more problematic, or you might say Israel is becoming more and more problematic, depending on your standpoint. But nevertheless, there seems to be a lot more tension going on there, which could add some fuel to this natural gas rocket rally that I'm hoping that we'll get this coming week. So there we go. If you've got any questions, I'll just read through them very quickly. Thanks, Bears versus Bulls. I'll see you tomorrow in your own chat room. I'll pop in and say hi. And I'm also waiting to do to jump on your stream. So let me know when you guys are ready. I'd really like to do that. I haven't had time recently. So I'll catch you on your stream. I'll catch up with you there tomorrow. But thanks for visiting. Damajan, there are some people already talking about natural gas at 1.6 again. Yeah, of course they are, Damajan. Don't worry about what people are talking about. That's not really important. What's important is what the price actually does. I'm sure there are a lot of bears around at the moment. If you remember the last time we got down to $1.50 or so, I'll show you on the charts very quickly. If you were around at that time and trading natural gas, not very long ago, that's where we got down to about 152, and that was in February this year. And when we got down there, everyone said it was going to zero. A lot of people said it was going to $1. A lot of people said it was going to 70 cents, $1.20, $1. There were all sorts of numbers floating around, and really, this is basically $1.50 is about as cheap as natural gas gets. We got there, we formed a triple bottom, beautiful. More like an M shape, actually, because this bottom didn't quite reach the middle, or the middle low didn't reach the bottom, so sort of more like an M or a W type shape, but a triple bottom really. And that's what happened last time, and everyone was saying this was going to go much, much lower, but it didn't. It tried once, it tried twice, and on the third occasion, forming that big gap. That's what moved us up. That's the gap we're looking at right now, in fact, after that last move down to 1.5. Now we're down to $2. Are we likely to go back down to that triple bottom? I don't think so. It's a triple bottom. I'll show you something out of interest if you want to know what happens after triple bottoms, successful triple bottoms like this one was. And we've now retraced almost 78.6% of the move from that triple bottom. I'll show you a chart that will give you some encouragement. Not a promise or a guarantee, but some encouragement. We'll go to gold on the day chart. And if you were trading gold a couple of years ago, when was this? I can't remember now. Gold on the day chart. Where are we? Yeah, there we go. So this was gold going back to October 2022. If you were trading gold at that time, we were trading, if you remember, at $1,600 or very close to $1,620. Very close to $1,600. A lot of people at that time were calling for gold to go to $1,500, $1,300, and I even remember at 12, I think it was $1,190 or $1,210, somewhere around $1,200. We only got to that level, $1,620. We made a triple bottom and took off from there. Now look what happens after a triple bottom, and this is very typical of a triple bottom. And we're seeing a triple bottom. We saw one last time on natural gas. We'll go back to that chart very shortly. There's the triple bottom on gold, a healthy retracement, not 78.6% like we've seen on natural gas, but natural gas is a different sort of animal. But this did retrace about 38%, I think. Just about. So gold retraced 38% after that triple bottom, and then it never looked back. That's gold, and that's where we are now at 2.5 or thereabouts. We're long on gold, by the way. We'll cover all these other instruments shortly in the next half an hour of this session. Now let's go back to natural gas and look at what happened on natural gas on the day chart, and keep that gold chart in mind. This is natural gas. There's the triple bottom, big move up, retracement, not 38% like gold did, which is around this orange level, purple to orange level, but we've retraced so far 61.8, and we might get to 78.6. That triple bottom is very similar in shape and sort of a lot of different things to gold. Gold moved down quite sharply like it has done here. Very similar to this. Made a low. Gold was very, very similar. Hung around that level, dipped down, triple bottom, and gold took off from there. Gold is on this path right here, this black path. This is what gold has already done after its triple bottom, and this is where natural gas is today. I'm not saying this is going to happen, but I think that there's every possibility. There are lots of good reasons for us to be bullish on natural gas. One, we've got increasing supply, increasing demand from as we approach the seasonal demand and weather demand. We've got a general bullish sentiment when it comes to LNG and exports and gas in transition, this lovely new term. Not a transition fuel, but now it's gas in transition. It sounds so much nicer. Doesn't sound like methane leaks all over the show and poisoning the atmosphere every day. Sounds lovely. So we've got all of that going on. And we've got this $2 level that was defended successfully on Friday. It's a big key round number. It's the top of the bargain, the bottom of the bargain basement into the dollar store region. Once we get to $2, we're or just a fraction below $2, we're in the dollar store region. So we're at, let's call this the dollar store region right now. We've got bullish sentiment. We've got seasonal pressure coming onto the price, pushing it up. We've got this big triple bottom, beautiful triple bottom, move up, retracement, Fibonacci retracement. Yes, it's a big one, 78.6. It's the extreme Fibonacci retracement, but actually my favorite. And if we bounce off here, we should see natural gas do something similar to gold and start to move up into these higher levels. That's what I'm thinking is going to happen. I'm not banking it. I'm not counting on it. I'm not betting the farm on that. I'm not mortgaging my house. I'm not borrowing money on my credit card. I'm not selling my wife or my dog or my children. It's just what I think is going to happen. If that does not happen, I will prepare a different alternative to this trade. I'll start to hedge, take off size, whatever I need to do, but I need to protect the downside at all times. And you should always do that. Now, this is one of the things I'll be covering in my trading course about risk, particularly when trading instruments like natural gas. And if you haven't subscribed to this channel, now's a good time to do so. And also, there are a couple of links below this video. I'd really appreciate it. There's a survey there. I'd like to know from you what you'd like to learn in the trading course. So there's an opportunity for you to tell us there. I'm going to do some feedback on that. We've had loads of response on that. and the results are absolutely fascinating, and I'll share them back with you, and you'll be able to position yourself amongst all the other traders that have been. I've sent it out to about 30,000 people, so it'll be interesting to see how they've answered the same questions in comparison to you, and where you sort of stand in your trading journey and your knowledge journey. So there's links below to just fill in the survey. It'll take you a minute or two. And there's also a link below to get your name onto the early bird list for the course. I'll be sending a lot more detail. It's really important they get on the email list, because most of it will go out by email. I'm generally quite positive on natural gas. Have we got the charts on the screen? Yeah. So yeah, I mean, look where we are. $2. It's such a key level. The bulls defended that level on Friday. We've got a triple bottom just ahead, just in front of us. To me, generally, this looks like a nice chart, and I'm not dissatisfied with that. And the fact that we held $2 on Friday, the fact that we've still got a little bit more wiggle room to get to that previous low on the day chart over at the spot price, the fact that we might have to get to the top of this gap, 1.92, and bounce. Maybe we don't even have to do that. This triple bottom is very encouraging. The gap, the top of the gap, the whole thing. I quite like this chart. And also, the bottom line is $2 is the beginning entry level to the $1 store. And we're right on knocking at that door. We've been there already this year. We don't want to go there again. What happened last time we got to $1.50? Let me just remind you before we go. This is the NYMEX chart, Henry Hub, futures price, tracking the front month. I want to remind you what happened the last time we got down to 1 point. We didn't even get down as low as this last time, actually. But call it 1.5. We had one spike below 1.5. Took us to 1.45. But apart from that one spike, we held the 1.55 level. We had multiple attempts at that bottom. You can call that, this is a day chart, so you could call that I don't know, you can at least call that a double bottom. You could call that a triple bottom if you want. You can call that, let's just draw that in. Let's call this a triple bottom. Why not? We can do whatever we want. That's 1, 2, 3. You could call it a quadruple bottom if you want to, or even a whatever 5 is, and then up she goes. Now, what have we got where we are today? Not very dissimilar. Same price level, 1.5. What do we have here? Hang on, let's move along. This is going back to the beginning of the year, 1.5. What have we got? Then I'm going to shrink this whole chart down so that you can see. And that's where we are today at the right-hand side of the screen. Let's put that together and see how it looks with these little smiley faces. There we go. So not very dissimilar to what happened last time. We went from 1.5 to 10.5 the last time we got this low. So are we going to 10.5? I doubt it. But we could certainly give it a go to get up to $3, $4. The green line up here, $4.40. No reason why we shouldn't have a go at some stage, a little bit higher than $3. The average price is at around about $3 to $3.50 over time. We're well below average at the moment. And we formed a triple bottom, just like we did there. That's what happened. Let's have a look at what happened on the prior occasion to that. The last time before that, there we got down towards 1.5. Here we've got a double bottom. You can see why I say natural gas likes double and triple bottoms and tops. We've seen many triple bottoms and tops. There's another, not quite a triple bottom, but it's more like a, I suppose a W-shaped recovery, but again, a triple bottom. And we can do the same thing at the top if you want. You can go across all the tops. You'll see many, many triple tops. That's not a triple bottom, by the way, but it's got 3 lows. I'm not saying that's a triple bottom. It's more like a W. But, you know, it's at the same level, 1.5. Just around about there. Actually, that was about 1 point. That was actually at $2. That was at $2. That's where we are today. There we go. That's what happened last time we bounced off $2. We got down to $1.90 and then bounced. Okay, into that blue-gray area right there. That blue-gray rectangle at the bottom is where we are currently. There it is there. Let's put this on a weekly chart. All right. All these little black squiggles are what I've just drawn in on the daily chart, so they don't look great on the weekly chart. But there we are there. Every time we get there, we form a triple or a double bottom. That's, as I said, it's a W bottom. It's not a triple bottom because the lows aren't equal in size, in depth. But on this occasion, a double. On this occasion, a triple, quadruple, whatever. On the last occasion, a triple. Just a few weeks ago, triple bottom, quadruple bottom, double bottom, sort of a triple bottom. And you'll see it at tops as well. On a bigger time frame, there's a double top. Double top. Natural gas really likes these doubles. Another double top over here. Call that a triple top, actually. Triple top. Okay, that one's a bit squiggly, like that. Triple top there. Double bottom here. Natural gas loves it. The triples are better than the doubles. There's another double there. I've circled those ones in those blobs. And there we've got our triple. So I think this is going to gap up. I could be completely wrong. I'm not betting on it. It's not something I'm prepared to gamble on ever, but I do think that's my most likely scenario. Put that in your pipe and smoke it. Don't believe me. Please don't take that as gospel or as a guarantee. Certainly nothing like that, but that's what I'm leaning towards. If it doesn't happen, that's fine. I'm looking to buy more natural gas anyway. For those of you who need natural gas to bounce right now, tonight, in a few hours' time, I'm holding thumbs for you, and I hope it does that for your sake too. $2 break teetering on the edge of the knife. Is there more pain or will it give us life? Natural gas gonna make us or break us. Hold tight to the wheel as the market shakes us. Rocket fuel dreams in the midnight gloom. Will it rise to the sky or crash down to doom? Speculators dance like devils on wire. Heat of the moment, it's a burning tire fire. $2 mark like a